On Investor Place Media, I've been writing a lot about the retail markets, and if you haven't done so, take a look at some of the retail names. A lot of companies in the retail sector have been moving much higher. Like, look at Target. Target just like blew February through the roof. I mean, they are just, phenomenal. Even Walmart's, doing okay. But you get companies like Michael Kors, luxury retailer, that's moving higher. You have the Gap, American Outfitters. They are moving higher. And of course, you have even Abercrombie and Fitch. Boom. It's just like February was phenomenal. The stock price was moving higher leading up to its Q4 earnings. And when Q4 earnings showed that they had superior sales performance, that they were same store sales were moving higher, even though that analysts were expecting it to actually decline given the pretty harsh realities of the holiday season, the retail sector. The fact that they were able to reverse that and actually record a 1% gain in sales, it was pretty remarkable. And of course, the investment enthusiasm followed. And so a lot of people would look at this data and say that this is an indication that the economy is improving, people are buying more stuff, discretionary spending is finally increasing. This is the renaissance that finally we can enter. And I would say yes and no. Yes, these retail stocks have definitely moved higher, but you also want to consider why they're moving higher. You look at the fundamentals of the economy, it's still crap. The job market, it's added nominal gains, but as so many people have stated, substantively, these are not the kind of jobs that you can build a career around. How much money can you make, driving a trash truck or whatever? It's just not the kind of jobs that would indicate a truly substantive recovery. I'm not going to go into details. So many people have already, broken down the numbers and the statistics. It's really not worth spending the airtime. But when it comes to the retail sentiment, the actual consumer sentiment itself is also very poor. Look at the latest data from the University of Michigan's Consumer Sentiment Index. It is down for the month of February. It is down year over year by 4% or something, and the confidence index is down, I believe, 6 or 7%. So these are not great indicators. It's saying that while the government's pushing their bullcrap statistics onto us, the reality is that most people don't feel recovered. Most people don't feel that their prospects for their finances for the future is very bright. And why should they? We see with our own eyes the actual reality. And the government wants to live in their own fantasy world, but we have to actually suffer through the true details of the economy, the true details of the markets. And so the next question would be, why are retail stocks moving higher? Well, a lot of it has to do with the George W. Bush symptom of lowered expectations. When everybody said that the retail markets during the holiday season is crap, well, if you got something better than crap, that's a big boost. And of course, at that point, the sentiment would move higher because you were expecting it to be so bad, and that it actually wasn't that bad. And some stores actually pulled off an increase in sales or earnings. So the sentiment, the Wall Street sentiment, shifted pretty dramatically to the other side. It was bearish, now it's bullish. Yay! But how long can that last? How long can that sentiment last? Are the fundamentals really supportive of the retail markets, broadly speaking, moving higher? I would argue it's very questionable. even with a luxury retailer like Michael Kors that specializes in high-end, products that cater to the affluent, it's still problematic. They are still in a problematic situation. You look at the US dollar. The US dollar is significantly higher than most other currencies, and that causes a mismatch. And that also causes a problem when you're trying to break into the emerging markets when your currency, when your Western currency is valued now much higher than an emerging market's currency. Big problems. You look at Russia, for example. A lot of the bullish people towards the retail sector, the luxury retail sector, would say, look at the Russians. They have, billionaires and millionaires just roaming the streets. And they're just buying up stuff like crazy. Yeah, that's true. That's true. But you're also talking about a country where the gap between, the poor and the rich is like almost 50-50. I mean, nearly half of Russians can barely afford to make ends meet. They can barely afford to buy clothes and food and other necessities. And once that's done, they don't really have that much money left. And then the other side of society is, buying up Bentleys and Rolls Royces and all that stuff. But that kind of polarization, that cannot be sustainable, especially if the oil markets continue to, be very poor. Well, Russia and other countries like it are a commoditized country. They export commodities, and when the commodities markets tumble, well, guess what? You can't really export that much at the premium that you used to, and so the country's earnings, so to speak, that naturally goes down.